Okay, we are live on the Prospero YouTube and Twitter slash X. Um, a lot to talk about today. The market just seems to keep on going up and up and up. Uh, we'll go through George's full thoughts as usual to begin the stream and how he's viewing the markets. And I believe we are sitting at, if not all-time highs, very, very close currently. So, how are you viewing this market, George?
I mean, I don't know how updated your look is, but one of the things when we do the portfolio at the end, we're really losing a lot of steam here. And it's like it looked like it was going to be a very strong open, and I just checked QQQ. It's about to go. I mean, it's on a path to go red. I'm definitely looking at perhaps getting out of SMCI too. So yeah, it was looking like it was going to be a very very strong morning. Um, but yeah, I actually saw QQQ net option sentiment. SMCI is back up. Interesting. I actually saw QQQ net option sentiment um go I think to 40. It might even go below. Like that was the last reading. I'm concerned it might go below, which is like obviously our bull level, and it's both have been there for a long time. In terms of QQQ and SPY. So yeah, I'm not quite as exuberant as you. I'm a little concerned. Depending on what happens here, um, I might actually switch a lot more bearish in the model portfolio. And right now we're like probably like I think last I checked. I think we're about like 70 bull positions and 60 bear. Um, so I didn't mean I actually didn't mean to say a lot more bearish. I actually meant like um, I actually meant a little more uh in terms of maybe evening it out to 1 to 1. But yeah, definitely not quite the exuberance that you were seeing there. But uh, I don't think this was on our list. But one thing I want to call out. Obviously we have this like developing SMCI story, and for our loyal watchers, it's pretty funny because I actually scolded myself about SMCI and adding it on like the I believe it was because it was a Thursday live stream, and I had added it that morning pre-market, and then it was down about 3%, and I was like making fun of myself for being Brett Favre and like maybe throwing an interception that I was fitting into too tight a coverage. But it was more like the classic Brett Favre, like looked like he was in a corner and ended up throwing a touchdown because it was one of my best calls ever. I nailed SMCI about 12 hours before it just like absolutely blew up. Uh, so there you go. That's another investing lesson that I get reminded myself. I thought I was teaching one investing lesson about like, maybe play it a little too fast and loose, but I ended up teaching another one where like I thought I was getting over my skis, but really just nailing one of my best calls ever. Uh, always interesting. The market can humble you in different ways, including doubting yourself maybe more than you should.
Yeah, so I think this leads us perfectly into our first topic, which is how passive investing has surpassed active investing. And it's amongst like all investing classes, not just the stock market. But so passive is now at 13.29 trillion and active is at 13.23. So obviously with numbers that big, they're nearly identical, but it's the first time that passive has actually surpassed. And I think what you're like displaying perfectly um, is how if you are actively investing using the Prospero signals in a rigorous process manner, it's probably you can probably get a lot better returns than just the passive way to do it, right?
Yeah, I mean, I think what I always say, and I forgot about my tea here, so I'm going to keep talking from afar as I get myself my tea. Right over here. Sorry, everyone. I was a little behind, but on time to stream. You can see that I'm really getting tea here, so I'm not
Is
just
that
lying to you all.
chamomile?
It's actually green. It's actually some ginseng lemon green tea. Um, a little like gunpowder green. It's a green mix. Um, very refreshing. Uh, and yeah, so basically, I think that this actually there's a lot of layers to this, and I think the first thing is like kind of as we're talking about, uh, not only I would say is this one of the best stock pickers markets, to pick from. because I think there's a lot of opportunities, especially the more it goes passive. I would say the more there are like particular opportunities, and a lot of what I think Prospero capitalizes on is like a lot of these very old stats are not of the world, where like especially what we're doing is are a lot more obvious than people. Like, so as hedge funds and like asset managers have become more computers and less people, that's really what we focused on, like, what I call robotic trade signatures. And I think why we're actually able to get ahead of things so well is automating and iterating a lot of those, picking up robotic trade signatures, getting better and better at it, and actually being able to see like the direction that the machines are moving the markets. And like, yeah, the fact that we update every 3 minutes, I think really helps with that part. And obviously, like this year is like absolutely incredible. We're still 212% above the S&P 500 as we sit today. And we lost our 90% accuracy. We're closer to 75 now. After a bit of we got aggressive adding some new picks this week. Um, but yeah, I would say that like that is the very, very important thing as you look at this, that I do think that it is a very new market. Hello, Akeem. Um, it is a very new market. And like, so I think a lot of those stats of how hard it was to pick against like humans, it is actually, I believe, especially if you're using AI like we are to track institutions and kind of see what direction that these big kind of waves flows go in. Um, I think there's more opportunities. And I also think a big part of that is just my general view on investing, where it's like hedge funds and like I think especially like value investing, a lot of that I think is, as someone who was trained as a value investor starting when they were 17 from like some of the best. Like I worked for one of the most prominent business school professors at Columbia, Bruce Greenwald, when I was, still in high school. And so I learned from some of the best. And like I think actually, despite that there's like there's very strong fundamentals, you're definitely going to increase your win rates by leaning on value investing principles, which I do. And a lot of what we've done at Prospero is kind of like automating that, like helping you do those checks quickly, integrating that into some of our decision making and process. Um, but yeah, what I would actually say beyond that is that there's a really good brainwashing done by Wall Street to tell you that it's just like, oh, like this PE means it's a good value. But like when you end up looking at PEs, and I think this is what's a lot of confusing to a lot of like, they could run the gamut and like what is a good PE or a bad PE is bad. But one of the things that like value investing gets, people very much on board with is like a much more agreed upon floor. So that people can like kind of know that their investments are safer as they start to like pile in these things because there's like a agreed upon value. But I think what that tends to do is it tends to like let people lose out on like what I think are very great like short-term opportunities and even medium to long-term opportunities. Like, and I think SMCI is the perfect example. What I said last Sunday when I was like, you might miss the boat on this, was that it was trading at a 0.34 2026 PE. So that was like a glaring thing to me, that it was like, yeah, whether it's sooner or later, this thing is going to correct upwards. And it was just a question of me, timing. I saw a lot of shorts. So it was just a question of when it was going to time. I think it became very compelling, some of the things I was looking at with net option sentiment in terms of that timing. Um, but I think that's kind of like a big lie that institutions, because they want to play in all these momentum plays, they want to get in first. Um, and so they want to scare retail away and keep you in a predictable box. And I think that's one of the things that like value investing kind of gets abused around, I would say. But I would say the other component to it for me is that there's a balance, right? As much as I want to say, like, as a retail investor, as a retail trader, like there are opportunities to get in at the right time to pick stocks. Like especially this year, as I said, there's going to be a lot of volatility. Passive investing isn't, I think, going to be as opportunistic um, as some of the things that you can take place in like a volatile market, where you are kind of like combining value principles with momentum principles, which is a lot of what we do with both option sentiment, social sentiment, a lot of the other things that we use. But yeah, I think there are those opportunities. There are opportunities for people that like think outside of the box. But I think the big caveat there is time, right? I don't think if you have like a half an hour a week, like to look at stocks, you're in a good position to find these short term picks. I think you really need to be closer to at least a half an hour a day if you're going to be able to locate and time these things well. So I think those are both sides to it, that there's opportunities, but I'd say on the other side, the biggest mistake that retail makes um, is that they don't really understand that like it can feel easy sometimes, but it's not easy, and don't be fooled by that. And like the last thing that I would say about like passive investing specifically um is that um I think where a lot of like I talk to some institutions sometimes, and a lot of people like think like they're pompous finance people, and they think retail investors are stupid. But one of the things that I correct all the time is I'm just like, actually, I don't think you guys really understand why retail investors like invest in single stocks, take on more risk than you might think is appropriate, like where you don't like, especially if you're not hedging and you're just going straight long or have a straight long portfolio. That's very different in what I've talked about. Like I will never go straight long or straight short. Like I'm playing something on the other side, at the very least, hedging an index. I don't just go naked long, no matter how enthusiastic I am about the market. It's not smart. But, that being said, like, I think a lot of people don't understand that. And I talked to like institutional investors about this. I was like, no, like, you are thinking way too like you are being way too like I'd say disrespectful and dismissive of retail investors if you don't think that they're aware that like Vanguard total return is a better return for them. Like the problem with something like Vanguard total return is like a it's not like sexy as I say. And I think that's one of the things that we do at Prospero. We kind of bring like good timings on stocks that are like safe and can be very exciting like what we do with Tesla or even like SMCI. Um but like beyond like the like honestly at the end of the day, it being sexy or not, that's actually what I would say is more of like a weakness of retail investors that they need things to feel exciting. But like that's a weakness of everyone, like to be honest. You have to be very well trained as an investor to like even like scratch at separating out your emotions from like sound logical decisions. Like I still get that wrong every time. Like even last week, what I was talking about with SMCI, like I thought I was just like trading on tilt and I made fun of myself. And it turns out I was doing something very smart. So like you could get that wrong all the time on both ends, like where I even thought it was like emotion and it clearly wasn't. It was clearly like a good time thing that I was like just getting like an intuitive message on. But yeah, I think that that's the other important thing where it's just like, no, I think retail investors want, and that's one of the things that we really care about at Prospero. And one of the reasons why we do these live streams is I think like a lot of retail investors that I talk to really want to learn and get better. And you're not going to do that investing in Vanguard total return. And I think that's what people miss. It's not just people being stupid because they don't just want to like throw all their money into a passive investing instrument. It's the realization that, like, yeah, like where I started on this, there are real wins to be had if you put the time in and you do research beyond passive investing. Like, look no further than even buying the Magnificent Seven and like the 2,000% return that it's seen. Versus, like, I think it's like 20x the S&P 500 over the last like X years. I don't want to get that wrong. It's something like that. Um, but yeah, look no further than that. And it's just like, yeah, it wasn't um it wasn't like a big thing in terms of it wasn't a big thing in terms of uh you know 5 years ago, like when you could have made this trade. You weren't exactly doing anything that risky by saying, hey, I like Google and Meta and Microsoft and Apple and Nvidia. There's a balance between passive and risky and like a lot in between. um with that, I actually pointed out in terms of SMCI, I actually pointed this out in the letter about like something that made me nervous about what was happening with it, which is that it had a very high dark pool rating. It had a 90 dark pool rating. And typically what that means for me is I just stay away from stuff because it definitely means like institutions are like exchanging body blows, maybe in both directions, to push a stock like one way or the other, or not move a stock. I think the easiest way for people to understand dark pool, um, in terms of like, basically pushing off the market impact for like, 24, sometimes 48 hours is this. Like, let's say you were really short at SMCI. And last I checked, it was like 63 on short pressure, which doesn't eliminate it from our filters. It was the dark pool that eliminated from our screener. Um, but 63 is not small, right? Let's say you got trapped as a short in SMCI and you want to cover a lot of your shares. If you cover them in the open market, you're shooting yourself in the foot a lot. So where is it a lot easier to cover them? If you cover them on the dark pool, it's up to like 24 hours, sometimes even more if you like know how to play some games before it gets reported. So right, you can cover your SMCI and maybe like even like get rid of some of the puts that you had before like you really like kind of accelerate that movement up if you covered in the open market. And I think that's the easiest way to understand how the dark pool gets used sometimes, or why people would even transact in the dark pool. So yeah, I would say that that's the easiest answer. There's there's Xavier, there's people, institutions that like probably have call options and are trying to just like blow this up. And then there's like shorters that are like pretty heavily short, are getting their butts handed to them and are just like doing their very best to like move the stock price down um, and get out of their short positions before earnings, I would say, which is the 29th.
So, based off our this discussion we were having before SMCI, I want to ask our viewers: would you consider yourself an active or a passive investor? I would think we have more active investors, but comment in the chats and we'll see, and we'll see how our viewers shake out.
They're solely a passive investor. I don't know what they're doing here.
Yeah, right.
but
That's
but interesting. Yeah. I mean, certainly you could consider yourself more of a passive investor than active investor. Um, but yeah, I certainly when I was a passive investor for like I've told this story for probably about 10 years, from like when I was like, well, maybe less, about 25 to 33. Um, I I didn't read much about the market at all, nor did I want to. But I worked on like AI solutions because I was like, I don't care about any of that stuff until I figure this part out better. It doesn't matter.
So, speaking of AI, we have a few AI stories we're going to talk about. It looks like we are getting more active comments, so that makes sense probably. Um, but so OpenAI had a partnership or has a partnership that they announced with Arizona State, which is the first kind of AI university partnership that's taken place. They're giving Arizona State access to their ChatGPT Enterprise tier for free, and I brought up the story because obviously, we're deep into the AI business happenings, and I wanted to ask you, like, do you think this is the first of many, and AI is going to change the way, college professors, institutions teach students going forward? Obviously, more and more over time.
I had a really cool like my alma mater, Claremont McKenna, has some really cool. They have a lot of like they're one of the highest alumni giving rates, so they're like just like constantly raising money, spending money. I think they raised $1 billion recently. It's crazy. I always think it's funny with that because they come around and ask for money, and it's like we're about to raise $1 billion. I was like, why do you think that makes me want to give you money? Like it sounds like you're good. It sounds like you're good. Like it's like, yeah, I mean, it's like I don't understand that logic. It's like whatever. Like I feel no pride in my school like raising a ton of money, especially like when there's a bunch of causes that like I feel probably should get more money than a college that already is very wealthy. But that's neither here nor there. I'm very happy for them and their $1 billion raise. I don't mean to begrudge them. I just don't understand the marketing tactics really. But they have this really cool program where they're like using combining technology and like the biggest issues facing the world, like climate change. Um, there's something with like I think one in genetics, but anyway, like it's a really cool program that I thought was interesting. And I talked to the guy running it, who they poached from like the engineering school, Harvey Mudd, who's like a very smart science person. And I had a very interesting conversation with him and the other and like some other professors of like what they're doing to handle it. Because like personally, and the two professors I was talking to really disagreed. It was funny. One was more computer science leaning, and one was more like English leaning. And the computer science person was actually more like, well, it's a part of the future. Like I'm actually encouraging people instead of like trying to catch people. I'm just being like, look, you can use it in these ways, but like please honor code, like don't use it in other ways. And like the English professor was like using like open source like stuff to like figure out how to like track if it was used and like grading. So it was like really funny to see that perspective. Um, but I think that also speaks to like English is kind of like an older discipline, and computer science tends to be like, more on the cutting edge, right? So I think, yeah, what you kind of see there and what that speaks to is like, yeah, the English professor kind of being like, you know, not even it's not even really clear what happens in something like English, especially because like college students are lazy, right? And if you can get like if like 70% of your students are writing like a book report like by asking Chat GPT, like it's not like you can ding them all for cheating. And then does it just become this weird thing about like how much are you cheating? And like, but yeah, I think that what I heard from the computer science professor and like what's like and part of my message here is like just because one is an English professor and one is a computer science professor doesn't mean they have to have these different attitudes. Like my suggestion is always um to embrace and just be like, no, like people are going to use it. Like, what should I assign on top of that? Like, what can I actually give them that's going to be like unique? Um, and I think that that's a big part of like how I look at things. Um, and I would say that, on that note, a lot of times people are like, well, like, what should I learn to code? Like, blah, blah. I was like, I don't think you should learn to code. Like, I was like, I think like a lot of like low level programming, like all that stuff, like you're going to be replaced. Like, yeah, if you want to learn like intro, just so you know it, I think that's a good idea. But if you're anything like above like intro to Python, intro to data science, I just don't even think that's a good idea anymore. Like, I'm not, if you already have those skills, I think it's good to have those skills and you will be able to monetize them for a bit. But if you're talking about building new skills, I think like, yeah, learning how to, leverage, chat GPT or building your own code on top of like Llama, which is an open source kind of chat GPT type thing. I think you're much better served like doing things like that than spending time doing things the old way.
And I believe Llama is Meta's product, right? Which we're about to talk about another one of the way they're using their AI, which is there was stats released that their new AI tools for their advertising, which is like the biggest proportions of their revenue right now, has increased ROI by 32% and has reduced the cost of acquisition by 17% already. And I mean, we're just in the first year or two of this being released, so it just seems like it's gonna have massive impacts on their business going forward. I think Meta doesn't get the credit for AI that they deserve, probably.
No, I mean, obviously here we give them credit and we've been very bullish on it for a while. And I mean, yeah, they're pretty close to hitting 400, right? I think they were I think they were like half of that when we first started like recommending them. Yeah, getting close. Um, but yeah, I mean, Meta has been smart. Um, before they were even like before Llama became popular, there used to be Google's like open source Python library used to be what a lot of people used. But like PyTorch, like which is also Meta, became like a real standard now for like what people use for just like a lot of out of the box machine learning stuff, and sometimes some of the even more complex stuff. So yeah, I would say that they're really smart in open source. And like the nice thing about open source, just so people know, is like at the end of the day, like you're bringing more people into your ecosystem. There's also like when something's open source, a lot of people are actually contributing to the code base to make it better. So you're actually like whatever like your internal systems are, like your systems that leverage Llama, you have like an army of people um that are building on top of that. And also it's like a lot of people use these like things, like and Google did it, like it's a recruiting tool. Like because like when someone uses like an open source thing and they're contributing to the code base, it's very easy for you to be like, oh, this is like, you don't have to spend as much time and money on recruiting. You could just be like, yeah, this is actually the best PyTorch programmer we know. Like, and we can literally see because of what they're committing to the code base. Um, so I think that like, yeah, that's a really like Meta doesn't get enough like, and I was a victim. Like I say this all the time. Like Meta doesn't get enough credit for the smart things that they do. Um, and granted, they've done some really dumb things. But like there's a reason Meta is Meta. And like they build good products. Like actually the products they build are and this might be like a weird double-edged sword. sometimes the products they build are so good, they become like weirdly invasive and feel insidious. Like all of the people's like relationship with like Facebook. And I've been there where I'm just like, oh God, I hate this thing. But how would I keep up with my friends if I didn't have it? Like, I want that like random event invite that I see. It's just like it's adding too much to my life that like, and I think there's a lot of people that feel that way. Although I like, there's definitely people that have deleted it. But anyway, yeah, I think that that's like a really important part of it, right? Where you're just like, um, where you're just like, hey, this is, they're really good at making products that are easy to use, and I think in terms of product, that's pretty much the most important thing.
Now, one question I did want to ask you about Meta and some other social media stocks. Being that it's an election year, do you think that could possibly drag or has the potential to drag on the stock? Because I remember last election cycle, it seemed like there was a lot of negative press that came out, and there's a lot of chaos that surrounds these things. So, do you think that has the potential to kind of drag on the stock?
I mean, I don't know. Like, it's like one of those things that's just like so hard to odds make. I mean, if anything, I don't necessarily look at it like that. I look at it like big election, probably a lot of ad money flowing in to push people one way or the other. That's probably the easiest way to look at it. If you're looking at like blowback, I mean, I don't know. I feel like they Meta's already been called out by like a lot of high level people, some people in the government. I mean, I feel like they've already been taken to task on like everything. It's not to say they don't like they could easily fuck up more. Like I'm not gonna put it past them. I just like to me, I look at probably the increased ad revenue as being like almost a certainty. Like, and like the more trouble is a hard maybe. Maybe you're like, less likely. And that's just because like it's not because I don't think they're gonna do anything potentially stupid. I think that there's also a decent chance of that. I just think people have like such information fatigue that it's just like people already tried to run the story where Meta like was allowing too much on elections and they're like, that already like they tried that. The stock's doing really well. They got dinged for it. Like, so it's like one of those things where I'm kind of just like, well, you know, that's the big like mitigating factor for me. Not that they couldn't easily do something stupid. It's just that like they have, and it doesn't seem like people care that much. It doesn't seem to hurt the stock that much.
Yeah, that makes sense. And to our viewers, if you find what we say during these streams and you like them and learn from them and are entertained by them, please hit that like button. We love seeing the likes and the comments. So if you could do that, that'd be awesome. I'll look at see where we're at in a few minutes after I intro this next topic, which is Macy's has declined a $5.8 billion acquisition proposal by Arkhouse and Brigade Capital Management. The shares are trading about $18 right now, and that would have been $21 per share. So it seems like Macy's internal brass doesn't agree with your whole negative thesis on that sector, George. Or why else would they decline this? Just because it's not high enough above the share price?
So they're yeah. I mean, they could think like, here's the thing. Macy's is up almost 2% today, even though we have a couple short positions in our model portfolio. Like the market looks like it wants to be pretty bullish. Like it's a bad time to make like a sharky. Like it's a good time for the hedge fund. It's kind of a bad time. Like 8 out of the last 9 weeks are winners, right? I think Macy's could just be like, well, the way the market's going, why would we take like a cut rate? Like they could do nothing good and easily be above $21 in a few weeks. So I think it's more of that, but it's just like, yeah, it's one of those like the weirdest thing I just recently experienced. I was like looking and I was like, look, I don't know, I might be moving into a new place soon, but I'm like waiting to hear back about it or whatever. And I was like mattress shopping and I like Macy's had like a better like delivery timeline. So I was like, oh, maybe I'll get this Macy's mattress. But then I went to find reviews and there were like no reviews online about it, which was super weird. And even writing about it, it's like, yeah, nobody reviews it. It was like this weird like excuse thing where it's like, yeah, like the people that buy Macy's mattresses are the type, like aren't the type to leave reviews. And I'm just like, that's really weird. Like to me, it seems more like cease and desist orders for other sites that have these reviews and like seven. Like I just like it's very weird. that there would be no reviews about something in this day and age. There's like 7 on the website, but it's just like they're selling a lot of those mattresses across the country. But I mean, to me, that's just a thing where it's just like that's why I was like, no. In the end, I was like, no, I'm not going to buy this mattress because to me that screams like issues and that there's a problem with these mattresses.
Yeah, they don't have their Yelp reviewers. At least there's no negative comments if there's no reviews, you know? It's neutral
But
almost.
that's what scared me.
Yeah. Yeah, you want that info. So next we have Google announced layoffs amongst a bunch of different divisions. One of the primary ones was YouTube. Um, they've had over 1,000 layoffs already this year. Um, I thought we were through this. Why do you think Google is still trimming their headcount? Just all these businesses trying to get maximum efficiency in this current macro.
I mean, AI. We've been like, there's like people talk about it generally. I mean, we talk about it here more specifically, but like, yeah, more and more stuff is getting automated. Like, if you look on YouTube, that's a very easy thing. Like, YouTube actually pioneered something called like that is commonly used right now called meta tags. Where when you go to get like see a video, they've got like all of these tags to them, but actually they had a lot of people doing that manually because like to get a machine learning data set, like you need help. It needs to see when it's right or wrong. And like it had a lot of people tagging videos. But like now, you can look at meta tags or even people tagging videos and tagging them well and going through errors. That, as we talked about, becomes a very valuable training set. Where they actually like, when you meta tag something well, you understand what's in the video. So like, yeah, do I think the company with like, I don't know, 15 years experience like doing these meta tags, understanding videos more, like obviously having a killer recommendation engine. Do I understand why they would be cutting headcount and probably more and more headcount? Absolutely.
Do you think tech companies are going to follow in their footsteps? As AI seems like it's going to. It seems like there's no stopping it from taking a lot of jobs and like being so efficient. So you think there's other tech people who have tech jobs that should be worried as well?
I mean, definitely people at Google, because as we've talked about, we think they kind of have like the best like pure brain technology. So obviously, like I think they might like they could be the first people that like really start to cut like jobs where you're just like, well, I didn't know AI could replace those jobs. Like I think we're probably like still 2 years away from that like shocking. Like we're talking about like YouTube being obvious. Like, I think we might start to see like, back office, like finance, accounting departments, that kind of thing, just being like eliminated. Like that's something that I could see where you're just like, whoa, like Google fired their whole accounting department. Like, or like most of them. Um, but Microsoft's the other one there, where it's like I would say Google has the better brain, but Microsoft is like, the tougher corporate, like, anything for a buck type of company. And I say this about Microsoft versus Google sometimes. People are like, oh, like, Google's like a capitalist enterprise too. It's like, yeah. But like Microsoft just like openly makes these shitty products that everybody knows are shitty to just like squeeze as much as they possibly can out of it. And Google actually like has the 20% rule. They're always trying to improve their algorithm. Like they're more wired to improve, where Microsoft's general attitude seems to be like, well, fuck you. You have Microsoft, you have to buy this latest version of Word, or Word's not going to work for you, and we're raising the price. You know, Google's much more like, we're going to give you our best stuff and try to improve it all the time. And just like, we're going to squeeze more out of you in ads. And like, I think that's a friendlier business model. I don't think like either of these again. Some people are just like, well, Google's capitalist too. It's like, yeah, I get it, I get that, but like, they're not like spitting in our faces in the way that I feel that Microsoft does sometimes. Like anytime I use Teams and I'm forced to use Teams by someone else, and they pay organizations to use Teams. And like, this accelerator I was part of that was kind of a scam, used Teams and it just really annoyed me. Like every time I used it and it like was breaking and like people couldn't, it's just like you jerks. Like you'd rather just like actually bribe people to use this than make the product better. And that's what I mean by spitting in our faces.
It's funny, we got a comment from D Curtin and he said Macy's is the next blockbuster. And when I first read it, I was like, oh, he thinks Macy's is gonna do very well. But I think he actually means they're the next company to go out of business, like Netflix, Blockbuster, Amazon, Macy's. Probably probably more in that sense now that I read it again.
Yeah. Yeah, oh yeah. It's like you thought next, like, I agree. There are these old business models um that are just like they need to get back. Like the big thing about Macy's is it's just like Amazon kind of kills it. Like Macy's was nice to go and get whatever you want. You just buy your home. It's like a one stop. Like you buy, like you move. It's like a one stop shop. Sheets, blah blah. That's really nice, right? In theory. Um, but if you're talking about like say going and getting all your kitchen stuff and like lugging that back yourself and paying a premium to do that versus Amazon, where Amazon is just gonna like show up at your door and you can return it a lot easier and you don't have to carry anything. Um, so yeah, I think that it's like it's pretty hard when you put it like that. It's pretty hard to like look at that as legitimate business model, especially if you're just like, okay, all things equal. Like maybe I would like to go to Macy's, see it myself, touch it, have it that day. But you don't really want to pay more to do that, especially when it's like not easy to return something to Macy's. Maybe you bring something home and realize like the quality isn't there. I'm much more comfortable with the Amazon model where like maybe I could even use a knife for a couple weeks and be like, oh, this got dull really fast. Screw this knife. I want a different knife. Macy's is just like a not, then you got to go all the way back to the store if they even take it. And a lot of times they might find excuses like, oh, you used this knife a few times. It's like, okay, well, what's your return policy then? If like I can't use the knife, I'm supposed to just like come home and like look at it and be like, I don't like this knife anymore. It's like not a real return policy. Um, but um, those are just like the examples. Like I honestly think that like something like having like Santa in Macy's is like a big reason anyone even like does Christmas shopping there. And if Amazon could figure that out, like they should just like, do an Amazon Santa pop-up that you get invited to if you like spend enough money at Amazon. And that could actually be really nice because it would be like really like elite, their best shoppers. You could have like a nicer Santa experience. It's not a bad idea. They should take it from me.
That's I actually like that idea. Hopefully, they see this. We gotta get someone at Amazon to see this. All right, but our next story is about an IPO, upcoming exciting IPO, and we've talked about them before, but it's been a while, so maybe we'll give our viewers here today a little refresher on your view on how you view IPO stocks. But the one that is getting some rumors is Reddit, which has been in the IPO headlines for years now. It seems like it's it's rumored that they're going to go public in March, and they're valued around $10 billion. Does this IPO excite you? And then, like I said, if you could share like a little bit about how you think about IPOs to maybe people that haven't heard it before.
So there's a really interesting thing with IPOs, which is like, and I remember a very smart like investor that I know. We just kind of had this big disagreement on this, but it was for obvious reasons. Where like he was talking about a Databricks IPO, and he was talking, which is a company I really like. They're doing great things, and he was like, we can get in like pre-IPO at this valuation, and then the IPO is like, well, IPOs traditionally do very, very well. And it's like always been pretty good to get in on on an IPO. But the caveat to that is in bull markets, which most of the time we're in a bull market. In a bear market, especially this most recent one, IPOs did terribly. So it's just like to me, I anyone that's watched me for a little, like one of the things that I think is the best thing that I could pass on is like even if you have to shrink what you're willing to invest in a lot, like to whatever you're just very comfortable and feel very confident in, you're way better off in doing that than, venturing into an area where you're just not as sure. And like, I draw that to IPOs where it's just like, I don't know, like they've been doing really bad. Would I ever bet against an IPO no matter how bad they're doing? No, because they could blow up in your face like the ARM one, even when IPOs were doing bad. Not that I would have ever bet against a chip IPO in this, but I just never really bet against IPOs for that reason. Um, but uh, would I bet for them? Again, even in a bull market, probably not. And this is why. Even though there's like chances are that it's more good than bad. The issue is like the valuations, the things that are going on in the background with these investment banks and who's buying them, the deals like because a lot of these deals are like they have certain hold periods and requirements and liquidation preferences. And like without like digging through those documents, it's very similar to what I talk about with companies that have like debt issues. Unless you're willing to spend a lot of time digging through those documents, it's very hard to understand like what kind of like financial conditions truly surround like uh, a company with a decent amount of debt, a company that's about to have an IPO. So it's like again, like overall, like you can look at the overall trends. But like to me, I'd much rather buy something like SMCI, where it's like it's not foolproof, but like or when we timed it then, or something like Meta that's just like a really good like kind of upside breakout options profile for like its 2024 PE, which has been like 18. Versus like Nvidia that's closer to like 50. Um, so yeah, I think that and for some more background, Nvidia is like an 87 profitability and 82 growth, and Meta is like an 84 profitability, 62 growth. So it's like for that PE, you're getting a much better value risk reward. And then I'm talking about the Prospero signals in Meta than Nvidia. Um, but yeah, I think that's really the big thing. I think as I think about that kind of stuff, where it's just like, what are you really paying for? Where is the value? And like you're guessing on an IPO. You could be guessing with the odds in your favor, no doubt, especially if you're in a bull market. But even then, if you're in a bull market, I'd rather like grab something that is high growth that I expect to actually do a little better, something like SMCI. That I expect it to do a little better, or a stock I bought this morning, like MPWR, um, than what the rest of the market thinks. I'd much rather own that than something where, you know, you don't really know how the market's going to interact with it at the price that it goes out at. And that's just like too much unknown for me.
No, that makes a lot
Like,
of
actually,
sense.
sorry, to do Reddit more specifically, I would
Hmm.
say very interesting business, but like I think some of these ad model businesses, um, I want to see if they're profitable. Yeah, as of 2023, they're not profitable. Only 350 million in revenue. That's not great, actually. So yeah, I wanted to check the numbers, but like, yeah, that's not great. Like a non-profitable ad-based company, like I don't want to get involved in that. Not until they're profitable.
And I think we just got a really good question from Xavier Woon. He's asking for IPO stocks without a backtest, are the upside and downside breakout signals reliable for short term? For short term, and maybe if you want to give like how long it would take before they would be reliable.
I mean, they're good. We just need options prices. So they're not pre-IPO. They're not going to do anything for you. But second, they've got options live and traded. Those numbers are good. That's the nice thing about upside breakout, downside breakout, net option sentiment. They're always live. They update every 3 minutes with the options markets. So if they're in there, they're live. They're good.
That's pretty cool to know. So it's basically almost instant as long as there's options. We're about to transition into our last topic before we get into the model portfolio. If anybody has any questions they want us specifically to answer before we do that, feel free to comment them now and we'll try to get to them. So Apple released, or someone released the numbers that are expected that happened after the first weekend of the Apple Vision Pro pre-orders. It's between 160 and 180,000 headsets, which is higher than expectations. But they did say that after this initial surge, they expect there to be a really big drop off, and they don't expect the secondary demand as much. But it's kind of crazy because the headset is $3,500. So, that's over $500 million of revenue in this. Apple snaps its fingers and they just have another, multi-hundred-billion-dollar revenue business. But what do you make of this demand? I know we've been kind of skeptical about Apple products and how we've talked about them recently.
Yeah, I mean, I think we really have to see. Sorry, I think we really have to see, um, kind of what, um, beyond their like base market, because there's these like loyal Apple people that will buy whatever, right? So like it doesn't surprise me that pre-orders are high. I'm much more interested in what happens like after those people buy and their friends try it. Like I'm more interested in the second cycle and like what we're seeing about there. But yeah, I could become bullish on Apple really quickly if like we see that like a lot of people are buying them, liking the product. Like I think that's the big thing. But like, yeah, I think it's just way too early. Like those numbers, there's like it's partly like it's a status thing. It's partly because people just like Apple that much that it's just like whatever the new Apple thing are, people are gonna line up for it for the foreseeable future. They're really gonna have to start like falling from grace a lot more. Um, but yeah, I think that that's the key thing.
I was just trying to look up while you were speaking. I couldn't get it so quick, but I wonder if the pre-orders require a deposit, like how Tesla does it when they do it, or if anyone could just sign up. Because if anyone could just sign up, it probably is a little juiced of the number. But if there's a deposit, then it's probably fairly accurate, I would say.
That is a good point. Um, but I mean, even if it's a low deposit, you never know. But like I'm saying, I don't think there's a difference. I think there's just like an army of people that are ready to line up for like whatever, like Apple product, you know?
Yep, they have their core buyers in line. I don't see any comments. If you want to spin to the model portfolio, we rip through our topics a little quick today.
No, let's do it. I would love to have I think we went like 2 hours last time, and I would love to have more of my morning. Um, or getting into midday now. All right, I'm just doing my normal setup. Let me know if I have
Yeah. So
any other questions.
as you're setting up, we got another one. Any thoughts on Netflix, Spotify, and YouTube? Maybe more. Not intending to launch apps on the platform.
Wait, sorry. What's the end of that question?
I think it's a little confusing the way it's worded. Maybe Xavier, you want to rewrite that? It's confused. I don't think it really um, makes sense. Just rewrite it, Xavier, and we'll answer it.
All right. Well, we had exited a lot of shorts. All right. I am. Did we get it back? Because I'm about ready to. I'm about ready to get moving. Oh, are you gonna do your get your checks? All right. Let's see.
We'll do. I'm gonna start doing that.
Oh, any thoughts on that? There we go. Um, I mean, I don't think people say the Vision Pro is actually more about work. So, like, I think it's one of those things that Apple's going to be launching. I don't think that makes a huge difference because I don't think their big thing is that they want people to be watching in that set. I think they want people to be like doing things, like doing their work day. Is my impression of it. Um, but I think we are about to um roll into this portfolio. Oh, I need a place for my. Hold on, my tea doesn't have a place on the desk. Wheeling it over. All right, let's do this. We are getting the model portfolio set up. Ooh, we crossed above. We're getting close. We're getting close to 40% above the market. That's pretty exciting on the model portfolio. Oh, I gotta start sharing my screen. I actually did for the first time a personal information check. I'm very proud of myself. There we go. Yeah, see, looking up if Reddit is profitable. Oh, what happened? All right, let's see what's going on here. Tell me what the latest with SPY and QQQ net option sentiment is. Oh
Okay.
damn, BlackRock. We might have to we might have to torch in both our like whoa.
QQQ is at 41. It opened at 47, and the SPY is at 55. It opened at 58.
Yeah, we're about like we got to get the hell out of BlackRock here. Sorry. Um, I might drop the other if I'm up on this. No, not yet. Yeah, for now, sorry guys. Getting out of BlackRock. We just saw something we didn't like. Hold on, let me look at it on the 1 minute. I'll wait a little longer, but I might ask you that again. It's not gonna kill us. But definitely remind me to come back to BlackRock, Steven. I don't like that 34 net option sentiment, but we'll give it one more reading. Sometimes we just
Gotcha.
get one low reading, and it goes back up. Um, not ready to bail on that yet. KNSL has really been hanging around for a while. That looks good. Not getting out of that. It's got a low net. What's KNSL? What does the trend on net option sentiment look like?
KSL.
KNSL.
Okay, it is very volatile. It has gone down to 23 and back up to 85 area over and over throughout the whole entire time graph, just up and down.
Oh, yeah, that's what I thought. All right, let's see. So we have 17 less shorts than longs, but I mean, I don't know. We'll see how we feel about that. We might actually be happy about that. Boston properties, how are we doing? I think we might want to get out of this. It's losing some momentum, and I don't know, going back down. We might want to hold that. I mean, that's something that I would drop if I wasn't looking like I think we might be too favored to the longs already. SSYS. This, on the other hand, I'm not feeling great about. Yeah, we're definitely getting out of it. ESGR. Well, we got out of this in our other portfolio. Also do your normal checks, Stephen. Your
Yep, I just got. We don't have one stock. Whenever you're ready, I could let you know.
what is it?
It's PKBK, a short.
Oh yeah, we want to take a look at that anyway. But yeah, probably want to drop this and BlackRock. Just get out of this. I don't like the way it's going.
We got a comment about if we're going to look at SMCI since it opened up and then went slightly negative today.
I've actually been looking at it. It's going in, and it's not, especially like yeah. Look, it's back. Oh, that's daily. Yeah, it's like losing. I was like liking it on the 5 a little while ago. Yeah, look. So it's heading back enough that I want to like keep hanging out and looking at it. But I probably want to do. Um, I probably want to do this. Um, oh no, that's not in there. Unless we decide otherwise. Oh, what's going on with this? I wanted to get out of that this morning. I got out of that in the other. Oh, look. Yep, no, we're staying in. That looks like it's going in the direction we want. Yes, that's going in the direction we want. Oh, yeah, is always an interesting one. Let's look weird looking. Wow, that's nice. Not going anywhere there. Check out an eye. Oh, that's also looking really nice. All right. Nothing to see there. Yeah, we might get through everything really fast today. All right. Now we can start looking at our filter. Do, 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 do. Got that. All right. 5. Very efficient today, Stephen.
Does that mean everything is looking as the way you would have expected? Not a lot of shockers?
No, I mean, I think we just got through our topics quickly. I don't know. I think it's more the topics, to be honest.
Oh yeah, the topics we did go by quick. I think last week we went even over on the hour.
No, we got like close to 2 hours.
Yeah, last week was a marathon.
Messed with my day a bit. I mean, it was good. We were doing a lot of stuff with the portfolio, and it ended up turning out well. So I'm not mad about it, but it was a marathon. Yeah, okay, so we have to squeeze this in here. I continue to play with fire with these unlabeled columns, but I think it's enough second nature at this point. All right, short pressure. So yeah, let's see what we're doing here. Yeah, I mean, I think we're just gonna throw in these. I don't think there's anything I'm all that interested. I can scan a little quickly. Oh, I might want to look at KLAC. That's pretty interesting. How do you look on the 5? Oh, yeah, we're doing KLAC. But I want to just delete some of this gunk. I mean, sorry to call it gunk. Wait, BlackRock is back up now? Can you tell me what's going on with the BlackRock time series? Net options time series?
They opened at 69. They're at 76 now.
Oh, see,
Oh,
we might have
yeah.
we might have failed. We're not going to do that. Failed a little too soon. Gonna give it some time. What happened there? Okay. That's not one. All right. No, I forgot. I'm being slow. Okay, 12. So we just want to get. I also wanted to look at BLD. I don't know what that is, but top build. Okay, interesting. Are you looking on the 1 hour? Can you talk to me about trending? I do like top build, I think. The net option sentiment trend on top build.
Yeah, Top Build opened at 54. They're at 81 now. 54 was a new low this morning over their entire trend.
Top build it is.
Someone's asking in the our picks section in the Prospero app for the short term and the long term, like what those time series actually, or how long of the time horizons would actually mean.
So short is very tough to ever define. Like we guide to that. It could be anywhere from like, pretty immediate. Like, but I would say you're pretty safe on like uh yeah, it could be pretty immediate up to 30 days. But like what we say is like you probably don't need to like it is probably good like whatever you're seeing, you're probably not going to get into too much trouble for a 24-hour hold, and that's kind of how we look at it. But like again, there's special circumstances and nothing's ever like, we also need to send the message that you should never feel like too safe. Um on the other hand, I would say uh on the other hand, I would say so long term, we call I'd say the sweet spot, and what it's actually pretty well back tested to is is sorry, a year. But I would say, it could be like 6 months to 2 years is the range that we give on that, if that's helpful. We're gonna do leg. And for once, we're not gonna just like troll around for these things. We're gonna look. We're gonna look at just these names. Wait, what happened there? Whatever I want. I want three more. Just these 17 names, and then we're done. Make it look nice today. Look at all of our extra time. All right. PTN. Maybe you could be a good. Yeah. I love that. I'm very excited about that because like we're very long tech. So like picking up a tech bear is great. Oh, another score. I kind of want to hurry up and get this out because these look like good hedges for us. No, definitely not rack space. IRT. I feel like I recognize that name. A bigger chink at 15. Not a big enough chink in the armor. AMH. That's not. Yes. Sure. Now, let's see. 30. Yeah, definitely. This is good. We wanted a little more balance. No, I already have UBX. Oh, I've seen Marquetta and the Longs not too long ago, but not right now. Um, I like this. I like Marquetta as a hedge. Nope. Why not? We always look at this thing. Oh, interesting. Let's see, 15. Ooh, this could be an opportunity. I know this thing has burned us in the past. Ooh, that is dangerous.
We got a question about how is there going to be sections in the app one day for sectors specifically, and I think you've talked about how you're working on some sector stuff, right?
Definitely. Like not only will there be, but like one of the things we're gonna do some interesting stuff where we're like actually inventing sectors. Um that could search. So like you could actually search an AI sector and we'll be doing stuff on the back end to organize things by like co-movements in price and how things are talked about online. It's pretty cool. Um do we have an open Voyager and then VYGR? And then also do we have how does the net option sentiment look on it?
Okay, net option sentiment trend looks pretty bad. And
Like
then
bad, like good for a bear or
yeah, good for a bear. And we don't have it open.
great.
It's at 49 right now.
All right. We ended up adding a lot more bears. So I think I'm gonna go a little heavier on meta. How's Melly doing? Grab another Melly. How about Eli Lilly? One of our favorites. Looks like a great. MA is the only other one I double up on, but I feel better about this mix now. Unless this looks really good. Don't do this to me. Okay. Why are you going slow? We're so close to the end. All right, one more check. Do I feel that good about this? No, I don't feel that good about it. Wait. Okay, one, two. Okay. All right, we exited some shorts. Let's see. We exited 2 shorts. So net. Now I wanted to add more shorts. Okay, I have to take a look here. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So okay, so we added 7 shorts. No, I don't need to just. I wanted to go more short. Okay. Steven, updated market.
Okay, coming right now. As I'm getting this, someone's asking when you add bear picks, what are you actually doing when you say that?
I'm actually doing nothing. This is all paper trading. I could get into trouble with securities laws if I trade these.
Okay, QQQ is at 43 and SPY is at 54.
I want to send this right now at 210. I like to market on the tens. Makes my life way easier. All right, sending it. I forgot. Did I get a question I was ignoring? Sorry. Oh yeah, no, I talked about the paper trading. um, I was like, oh, did I ignore that question? No. Oh yeah, thank you, Spiky Dude. I'm pretty excited about it too. We actually have someone who works as a NASA uh, AI, uh, a NASA AI fellow working with us on that project. And we have a Twitter space tomorrow that we're going to be on Wolf Financial, and he and some other people that are going to show up. That's going to be pretty fun. So if you're around 2 p.m., you'll be able to see on our Twitter, on Wolf Financial Twitter X. I can post that here, so it's a little easier. But I recommend it. He could probably even answer some questions about what he's working on a little more specifically if you have things on the technical side. Um, here, um, mm, let's see, posting our X here. All right. Any other questions? I got my work done.
Yeah, we're good. So we have the Twitter space tomorrow, and then we'll be back here Wednesday to close the market, 3 p.m. And I believe Tesla reports Wednesday, so maybe we'll even be live when they report, and we'll see how that goes. But if no other questions, I think we're good.
All right. Thanks a lot.
All right, thanks for coming, everyone. See everybody back here Wednesday.